There's certain principles and certain terms that you're going to hear bookkeepers and accountants constantly referring to. I'm going to quickly run you through the main principles. Firstly, they speak of a business entity. Now, a business entity is considered a separate entity from the owner and should be treated separately. So we speak of separate legal liability. Any personal transactions of the owner should not be recorded in the business's accounting books unless those transactions relate to the business itself. So that's limited liability and a separation between the business and the owner. Secondly, you'll hear them speaking of going concern. And all going concern does is it assumes that that business is going to continue operating indefinitely. So on this basis, assets are recorded based on their original cost and not the market value. And assets are assumed to be held so that they can be used within the business and not to be sold. That is simply what your going concern is. Thirdly, you hear accountants speak of the monetary unit. All that says is that everything in the income statement, in the balance sheet, or in the cash flow must be captured in some form of currency. Now, depending on where you are, in South Africa it could be rands, in America it could be US dollars, if you're in Nairobi it could be the Kenyan shilling, etc., etc., and so forth. Everything in the income statement, the balance sheet, and the cash flow must be measured and captured in a monetary unit. And that is what the accounting books reflect. Fourthly, you'll hear them speaking about historical cost. Now, all business resources, everything the business buys, which can be valued and recorded, will be recorded in the books based on the actual cost, based on the cash equivalent that was paid for those particular goods. That is all that refers to. Fifth, sometimes you'll hear them talking about the matching principle, and that simply says that revenue or expenses must be recorded in the accounting period in which they have occurred. So they must be matched to the specific years or the specific months in which they've been incurred. That is the matching principle.